Hello guys, welcome to the Trading Parrot, and we have 94% chances of 25 basis points rate cut coming in just 2 days on Wednesday, and 5.8% of getting 50 basis points. Basically, is now sitting at 100% chances. It's just a matter of whether it's a double or a single cut. And all of that, all I can see that uncertainty together with the possibility of getting a double rate cut at 50 basis points, that is when it comes the gray area, whether we are cutting because we are forced to do that, in which case the people with the narrative that something broke in the economy are gonna start shouting clearly. And at the same time I'm recording, I'm seeing how Bitcoin reacts to the daily resistance, and it starts producing a small 4-hour breakdown. Yeah, we still have around 3 hours to reclaim that, and general markets haven't opened yet, so we need to look into all of that. Since I haven't done the Sunday Alpha, this video is gonna be longer than expected because I need to include a lot of things to catch up, so make sure you have a look at the link, the timestamps in the description to navigate what matters to you. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes on this video Monday morning to get a lot of energy to make much better videos for the rest of the week? It's a win-win. Do you want to trade with a decent exchange, not KYC mandatory, get access to leverage, all the altcoins built by the same people that implemented Bybit back in the day, and at the same time, as soon as you sign up, you get $50 just by signing up? Even before depositing your own money, you can already trade with that using leverage. Now, if you deposit your own money and you start building some momentum, you can get up to 30,000 in USDT trading bonuses. Google Trends on Bitcoin and altcoins both at the low end of the spectrum. Let's have a look at the most important, most influential news according to ChatGPT. What's next for Bitcoin as downside fears ease ahead of the Fed cut? Well, BTC options call-put ratio skews have rebounded towards neutral per Amber data, signaling traders are rotating from downside hedges back to upside bets, typically a near-term bullish impulse for spot. And on September 13th, we have 642 million daily net inflows on BTC ETFs. That's really impressive. Bitcoin climbs as economy cracks. Is it bullish or bearish? Macro mix, softer dollar and falling yields boost BTC, but sticky inflation tempers upside. Net impact to BTC near term is balanced, supports dips, but caps breakouts. That is 5 neutral. The previous 2 were actually bullish. And I asked my community as usual on Patreon, which you can join with the link in the description, what do they want me to cover in today's video after 2 days of no videos? Please, could you cover this week's news, events and possible impacts? Well, positioning in view of a 17th from C, likelihood that September lows is gone already. That's a fair question because we were expecting to see some moves down in September, and it could be the case that that was it. Or could October now rally be a sell the news if long-term holders are still massively selling? Best on-chain analytics available for free? I will say Bitcoin Magazine Pro. You get a ton of value there for free already. Well, and as you probably mentioned, CoinGlass, at least you need to sign up. It's still free. You can access a lot there as well. Have there been any major BTC movements to exchanges? Suggestion of potential sell-off from this week? Possible longs, shorts, MVRV score pointing out price dip below the band. The last 2 times we bought up at 49 and 74. The question is if we are getting that reading the same as this point, because the price is really not at a low at the moment. It's actually pushing from around 107 point something, 10K up. You can pause the video. Here is a big picture of everything that's going on that influences Bitcoin. We get the inflation, the PPI that we just had the read last week, that was actually bullish, supporting the rate cut. The unemployment and the jobs are all as a little bit slightly in the broken area. It's expected a 25 basis cut this week. Of course, we have China growth, August industrial output 5.2% year on year, softer global demand pulls, Trading war noise, that is an ongoing thing, geopolitical, rates, dollar, yield markets hovering into the Fed, risk appetite is currently capped. Interesting because we've been saying this for quite a while and we still see Nasdaq and S&P to continue rally. Now this is a particular rally. It's not just risk on assets rallied, it's everything. Gold rallying at the same time, with the exception of dollar that is just pending in the falling wedge. We'll have a look at those charts, general markets at the end of the video as well. Don't forget the timestamps to find where I'm doing that. Then we have BTC takeaway, mixed signal, cooling growth and only gradual disinflation. Uncertain Fed pace and trade geopolitical overhang, rage-bound, low conviction flows until the Fed decision and next data reset positioning. Notice that this is the analysis of ChatGPT. I'm not necessarily supporting these particular views. I'm going to look into the order flow and other things to really take with a pinch of salt, because multiple times we get everything pointing out that it's a disaster, that everything is going to collapse, and then you just keep rallying. This week is pretty busy. Of course, we already say the FOMC, but let's have a look at what else is coming in. Production in China. We got unemployment rate in the UK. We have retail sales month on month in US. We got also by the end of the week something very important. Don't underestimate it. What's going on with Japan? Remember the last time the DXY pinch almost as high as the COVID crash? That was Japan. So knowing what they're going to do with interest rates can really affect the global economy, the DXY and everything. So eyes on that. This is happening at 4 a.m. in UK time. A reminder that on Friday there was a new reading on the breast valve, that is the Fed balance sheet, and it was pointing again down. Not a significant amount, maybe from 318 to 316 maybe, but that means that the Fed is really not betting big or betting anything so far from around mid-July into the current trajectory the economy is going. If they were thinking, well, everything is going to pump, they will typically start allocating assets and making a breakout to the upside. But we are seeing kind of the opposite from mid-July. And that is something not to take the final decision, but put it on the side, because the Fed really doesn't like losing. And we are in September. Look at this from the point of view of seasonality, 7.79%. That's the highest we can see at least until 2013. 3 years in a row in the green in September, compensating for all the red that we had in the past. And that's pretty much a counter self-fulfilled prophecy, right? Because we were expecting constantly, not expecting, but we were pointing out the negative average that we see in September, but we are kind of repeating so far 2024. Notice in the bull market in here, it was just red during September, and the recovery was coming in October. Let's have a look at what happens with October's when September is green. So far we can see in here that we repeat the picture and we get a rest of the year pretty strong. At least we can see that there. Also in here, after this 7% in October, we kind of peak in November. December and January was okayish, up and down. Let's look at CME gaps. Last week we built this gap. Actually, that was on the 22nd of August, and it took a couple of weeks to close it full. That was part of the reasons why I decided to enter around this point here and take all this rally of around 3K into 116. I closed earlier than that, and I shared my exit with my Patreon. It ended up closing the full gap, and I started focusing on taking a short. Now, I would have liked the price to go slightly higher into 117 to take the short. At the moment, this is starting to look a bit distributive in here. We'll see if we break the structure. So far, we are only breaking the most bullish support, not really doing a lot of damage yet. And remember, I had these two options to start moving down from the bear flag from 114. That was my video from last week. This bear red flag one here 5 days ago. And then I have a second option to break after closing the gap and start fulfilling the bear flag. And the third option is to continue with the V recovery all the way into all-time highs. So now it's very decisive, and we have the rate cuts to help with that. In theory, traders talking about the 50 basis points expect a lot more in terms of Bitcoin if we get that, because obviously less rate cuts, that means that it should rally more, right? That's kind of the expectation. But there are plenty of macroeconomists pointing out that too fast double rate cut is actually not a good thing. It indicates that they are really in panic mode, although they are hiding it. In that case, that something really broke in terms of jobs or something else in the economy, and that they are forced to do a late double cut. And that has coincided in the past also with recessions and crashes in the market. So that's why be careful what you wish for. I think at 25 basis points means that, yeah, we can start cutting and we can do it in a controlled manner. In my opinion, that can provide upside in a sustained way. I have fully updated the Bitcoin status. I have now shared the link in the Patreon community tab, and we can have a look. On the 4-hour, we had this breakout, and we've been testing the most bullish support. At the moment, I'm not going to write it down yet in the Bitcoin status sheet because, we still have a couple of hours to reclaim the support. So I don't want to say it's already broken. It's been broken at the moment, but if in 2 hours we reclaim, we are fine. And this could be just the reset of the weekend, and we could use this spring to throw the price back into the top of the range of the RSI 84. That means price going all the way to 127. So I'm not falling in the trap yet to claim the breakdown confirmed. If we break down like this and we close below these levels, for example, 44, 45, more or less, at the moment we are at 47, 48. So 3 more points lower, we have a lower low. And that could be a little bit more significant. Notice as well that the cross-B ratio already made it to the top of the range. The last time we did that, we were at these highs, about to reach 125. So pretty relevant to see that. We have a final push from 122 to 125, but that was it with the bearish divergence. So keep an eye, because volatility is already saying, well, we are about to have a local top. Local or fully top, I don't know. Daily is bouncing from the 61.76. By the way, going back into the support all weekend, that support held. It's just now that we are below it. We started testing it early Monday at 2 a.m. and now we are back to testing it. We see a strong rejection here with an equal high, a liquidity hand potentially. This is the past week high as well that is holding us. Let's go back to the daily now. As I was saying, we are against resistance on the daily. That resistance can be seen there with the orange line at 117.3. We are still above the anchor VWAP that is at 113.4. I think there is a line in the sand in here, right? Because this was an M that was holding support at 112.5. That was the neckline as well of the inverse head and shoulders that threw us back into 117. Now coming back down is fine. It's a retest, right? But there are some lines that we shouldn't close below it. If we close below 112.5, technically we came all the way up here just doing a dead cat bounce, trapping longs to then squash them. Where? Well, typically when we trap longs, we come back down below the previous low. So that will be hitting the 107. Oh yeah, and 107 has a lot of liquidity. So there is a chance that price could do that. Let's call it, there is significant motivation to do that harm. It's tempting for market maker, but that doesn't mean that necessarily he will end up picking that choice of pain. After all, many shorts are entering as well. So he needs to make this tough decision now of using the rate cut to punish more shorts and we'll look at who's been punished more in the recent past. We haven't looked at that chart in a while, so we need to look into that before I let you go. Top of the range on the daily is at 143, so watch out if you take shorts. Be very careful because price could go to here and beyond that at the expense of bearish divergences. If we break 117, next resistance is the all-time high. After that, we do not have any other structure. We can do extensions, Fibonacci's and stuff like that, but then it's called price exploration. We are still in the daily in the context of a MACD cross, bullish, but we are starting to have the lighter histogram candles. That is because we slow down as we approach the resistance. CPR is respecting the final CPR pivot of the month of September. If we manage to break that, we can go into the first resistance, which is at 119.5. Then we have two more. If you are kind of very bullish with what's about to happen to Bitcoin, let me tell you that the second resistance is 135 and then 136.6. So that is the range high of the CPR. The range low for a failure or something really breaking is 85K. If the pivot was to reject us in here and stop with this uptrend that we've been every month touching resistance, in that case, the first support is at 102.3. The weekly time frame is at the moment against resistance. We have 1, 2, 3 candles that were holding 117.1, and we've been very close to that level. In order to prevent a rejection in here and a dead cat bounce to the downside, we need to reclaim 117.2 and close the weekly above that. Ideally, even above that, even above 119.4, which is one of the pivots I was mentioning just now. But if we do that, we need to do it with candle close above it. We already have a double top with 2 weeks. The last thing we want to do is take all the effort to go there and to just leave a third week. That means that this is very distributive, and if it starts looking with too many weeks like that, then we get decent corrections. Now, something else, look at the Puell market support band. You're going to notice that in some parts, in some trajectories, periods, you see that the red is on top. That is within correction period, right? When we are rallying, we see the green on top. Being with the red on top usually is sideways consolidation or bearish periods. We place some closes below it in this cycle because it's been different. Previous cycles, bull market support band actually act as support. In this case is a period up, a period down, a period up and down. And we had the last period down here. And something else I want to show you is that we are in a period where the red is on top. We have a bear cross. And usually during this period, we should have a little bit of sideways. What have we done during this period so far? We have 2 green candles and this candle that just started a couple of hours ago. So let's ignore this red, not settled. Let's ignore it. 2 green candles from support. Have we done something similar before? Well, here we have 2 green candles with the beginning of the red and we started pushing up. We got to the previous high, we saw rejection, and then we spent some time below it. Here is red, right? And we have 2 green candles around the area where the red is on top from the first time. What happens after? We roll over and we spend some time sideways, still in the context of the megaphone pattern. Red again in here. Here we don't have the pattern. We don't see green candles. We just see these 2 green candles, but from below the bull market support band, and eventually we reclaim. So if history repeats, we should have some sideways in here or a period where we go below it. Just past performance, we got a confirmation again on the weekly of the bull cross on the stochastic RSI. So this one now is arm wrestling with the bear cross from the MACD. Let me know in the comments who you think is more relevant, who do you think is gonna win, because we are bouncing from support in here on the RSI and the stochastic RSI is saying bull cross. So are we going to also get an incoming bull cross on the MACD with subsequential upside as well? Or is the MACD the boss and we're going to come down and lose support on the RSI as well? Important, relevant, leverage squeeze made a whole move all the way to the bottom in here. Interestingly, the price hasn't moved down, so the price is just building this potential double top and battling against the resistance that we've been talking about. But thanks to these two candles, it just puked back down in here. What does it mean? That a lot of longs pull out or a lot of shorts enter, because this is a ratio, longs versus shorts. So if we are at this end and the price is still high, I'm tempted to say that a lot of shorts have entered. We could confirm that later, but typically my entry is being at the top of the range in here, tons of shorts. Yeah, that is great for taking a long, but I prefer to do that together with the price having fallen, not the price at the highs with a lot of shorts. Yes, that could ignite a short squeeze and go higher, but I always prefer conservative setups, and it's not conservative to have the price at these highs without any decent pullback. SOPR continues at the lows, meaning that still people are closing mostly in a loss rather than taking big profits. It is on Ethereum where I'm seeing that people are taking profits in the green here, and that could be contributing to produce some more distribution in this area, potentially. And I wanted to show you this. Futures open interest oscillator has been almost at the top of the range. If we get beyond this blue line in here, that means that the risk is high to take a long. It's better to be looking for shorts at that point. It has come back now to 4%, cool down, that is fine. When it's at the low end in here, it's typically better to look for longs. And what's going on with the futures, longs, shorts, liquidation, dominance? Who is getting liquidated the most in the past price action? Recent one. It does matter because this acts as a little bit longs and then a little bit shorts. And it's like by seasons of who gets liquidated. And as you can see, when I was going for holidays, it was pretty much shorts getting liquidated thanks to the price going into all-time high. But eventually the longs started getting liquidated, and now we are at the top end of longs being liquidated. So that coincides with this move into 107.8 that we made down. Too many longs liquidated, and now they are kind of liquidating shorts. This is a lagging indicator, so I suspect that from there into 117, all the 10K move has been liquidating shorts, but that is not appearing in here because it's using a 30-day moving average. In a couple of days, we're going to see this coming down into potentially the zero, or maybe in the lower end. To get into the lower end, price needs to go slightly higher. But I think now we are in the timing of liquidating shorts. Whether that's going to span a lot longer or not, well, you can see for how long this took. From mid-July into 13th of September. So more or less every 2 months, every month and something, or 3 months, no more than that, we start sharing the love with the opposite team. Last week was a perfect week for ETFs on spot Bitcoin. All days in the green, not so good for Ethereum that had a negative day, I think on Monday, but it closed really positively with 400. Do we have an all-time high cumulative? Not yet. 53 in the neutral, and Cerberus is curving up. Something to note, this is alpha. I never seen 3 sell signals in a bull market for Cerberus. You can see this bull market, 2 sells, 1 sell, and 2 sells so far. If we get a third one, it will be the first time. Let's look at the previous cycle. 2 sells, 1 sell, 1 sell, and 1 sell. So this whole bull market never had 3 consecutive sells in a row, which means that basically price keeps rallying and then taking pullbacks and not really falling through with that movement down and continuing a third time with another leg up. So if this curves up and reclaims in this area and we get another warning sell, that will be really sweet to look for shorts. Now, if this is all it can do and it comes back in here and we enter in the warning buy, that could be also great, even if it ends up being just a dead cat bounce. Liquidations, I'm focusing on the top area of the short-term liquidations. You can see that there is one at 117.4. That is where I want to dip my toe in a short if we get lucky to get there. Otherwise, 119.3. If we focus on the very top end in here, and now we bring 25x's and 10x's, you're going to see a big liquidation at 130, but we are so far from that, and it's mostly small leverage relative to 50 and 100x. I always want to see the degens where they are because price goes always to them. Let's put it back to 50 and more, and let's look the low end. That 107 continues to be very sweet. Right below the price, we can see some liquidity here at 114, which is where I close my long. I don't like to re-enter at the same price on a long. Maybe it's just a Kabbalah or something, but if I close and took profits and then the price went slightly higher in here and then I enter in a long, I don't want to be in the position of this carrying on to the downside. Apart from 107, this 109 is quite heavy. Let's look now. Oh, let me bring the 10x and the 25x and let's look at the whole range. Yes, 107 still wins everything, even wins against 130 in the short term. Let's look at the longer term. Well, longer term wins. This has been a heavy accumulation, all this area. I will say it started from around March, accumulating in here together 3x into 25x. Let's see the 25x's. Well, 25x's are located now at 107. Oh, that's very interesting. So high leverage is located in here. There is a chunk to take out up until 120, but then it runs out of high leverage and it has to go to 107. So that's just something to lean more towards the bear flag in here if something failed or something disappointed on the rate cut, or if it's a sell the news event, if it turned out to become that. Short-term liquidity, 1 month on CoinGlass. You can see that with this move down, we are leaving behind a chunk there that was not taken. That is one of the main reasons why I think taking the short from slightly higher is my choice. But of course, it's just 1K, 2K up now, so I might miss the entry. I prefer to miss some entries at the expense of not taking those trades, but if I take a trade, I like to see it most of the time entering in the green as soon as possible, locking in my break even, and that's just looking the other way and doing something else. And then getting pleasantly surprised that I made a lot of profits. 107, you can see and compare against this. There is a big chunk in here in the last month. It's also visible in the liquidation map. Purple whales have slowed down over the weekend. That is typical. It's not necessarily that they became bearish. They lead the direction of the price, so we always keep an eye on that. Support is currently at 114. That's where most people are betting to re-enter, 114.5. There is a big chunk there at 114.5, 3.2K, surrounded by a few thousand right below it. Then there is another hill in here of volume profile, 113.9. And on the top end, there is some defense at 117, which is more or less what I wanted to do. So they're kind of executing something very similar, I guess. Shorts coming down, longs as well over the weekend. Open interest has been coming down. Let's look at the order book. Everything is so far in the positive, particularly the 0 to 1% deviation away from the price has good support. 1 to 2 started being in the positive. It was all the weekend with shorts. 2 to 5% longs as well. 5 to 10 is turning into neutral now, potentially heading into the positive as well with the 0 to 20%. You can see in here in the heat map how the most defense is within 1% of the price, and that is evident in here. Those limit orders are right there located, are probably competing against this one that is ask liquidity. Of course, that is contributing to make it darker. There was a lapse of a moment around 13th of September that I think is Saturday, where the funding rate was pretty much in the negative in here. They were shorting a lot. Interestingly, all this shorting didn't follow through with a lot of upside. It just put a slightly higher high and then it came back down. There's tons of liquidations right below the price up until 100. 112.7 in here. And longs continue to decline. How low are we? Now we are at 49 from the top of 70. That's 30 points down. At some point, it will get very close to this blue line where I left it there because we start seeing reversals from that line to the upside. If we enter much lower into 30, 31, that is also a great alpha. And we have a wall of delta, 372,000 of longs in risk at the moment. You can see we took the last fair value gap of 116 and we continue to be in a perfect bear flag in here. So now price needs to do a heroic effort to use the rate cut to continue into what it could be a V recovery thanks to that, or start deciding, are we gonna go for these fair value gaps and start hinting towards an actual bear flag, or there's actually another scenario which is to form some sort of double bottom in here. October starts around here, so we have little time left to enter the next month, which supposedly between October and November, one of the two must be in green according to past performance, if that means anything. Nasdaq general market pre-market price is slightly in the red, but almost difficult to see. You can see the red in there is doing pretty much nothing to the surrounding candles, but we have a hive signal, which is a bearish divergence. We have rolling over on the RSI in here after the breakout. VIX not doing anything, but is printing a hive bullish divergence. Remember that VIX pushing to the upside is negative for the markets, and dollar continues to stick around all-time highs prices, indicating that there's people running into the safe haven of gold, or potentially hedge funds, both allocated to stocks and to gold to hedge the risks that we are on. Dollar index is more or less testing the walls of the breakout bullish from this area. If we hit 97.8 and we carry on slightly, we're gonna get the DXY do a breakout from a bullish pattern. This is a falling wedge. The RSI did it already on 7th of July, and the momentum is holding at 36 right there with a slightly bearish pattern in here, a hidden bearish divergence, head and shoulders on the RSI. But if it manages to hold at 36, we could continue into the next resistance at 49, see the dollar do something. If dollar broke out and managed to get into $101, what pattern do we get in here? We get a cap and handle. That will be bearish for Bitcoin, for risk on assets, and that could bring back the DXY into 105 or slightly higher. Of course, it's not guaranteed the breakout bullish. Even if this is a bullish pattern, we could see a breakdown in here that is a multi-year breakdown from 2011, 2021, and now 2025. So if we break this, that will be massive and historic, as you can see in here. Of course, that affects Bitcoin, that affects everything. Pretty much everything that you're seeing in the screen is priced in dollars. So if the dollar is strong or weak, well, that says a lot. On Friday, there was a rotation from the right into the left-hand side in here into the Magnificent 7, almost. Amazon did some red, and altcoin season continues to stay here. But this time, since all the amount of coins, well, it's difficult to pinpoint which coin is going to be doing its move, and many people are complaining that those are just moves of 10%. To me, to confirm the altcoin season is not just enough to see so many coins outperforming Bitcoin, but also you have to look at total free, what's going on in there, if we are doing any significant move. If we make moves of, billions and billions and billions, then we did have the altcoin season. It was just spread out across too many coins. So if you're wondering which coins are currently moving, you can see in here the top mover is Pengu with 257%, IP, MNT, INA, CRO. Well, actually, I'm holding CRO. I haven't checked my holding. Say, Link, Ethereum, Wild, ARF, Solana, HBAR, Doge, AVAX, XLM. Let me know which ones of these you want me to do TA this week. I can do 1 to 2 TA videos dedicated in depth. So cherry pick the ones that that are a must currently to do, and I will do it. Today, not necessarily a great day for opening with the alts, but we still have a breakout on others against BTC, so that is positive, and nothing broken in the USD versus total free dominance. Bitcoin dominance still at the lows in here. It's kind of hinting a double bottom with a potential move up. That wouldn't be that bad. Of course, that means that Bitcoin takes more of the flow of funds and altcoins take a dip. Be careful because the open interest, funding rates, and a lot of things are very overheated in the altcoins. So if Bitcoin dominance pushes from here slightly into, let's say, 46, something like that, that might be a slightly unpleasant feeling with the altcoins. I personally think that the Bitcoin dominance should move slightly lower, either from where we are or after doing that annoying move up. Something to note that you might be wary of is that the USDT has done a breakout on the 25th of August. I was away and now I'm noticing that it's doing the retest in here against this trend line on the RSI. If this plays out, it means that the RSI could start a rally like this, in which case the USDT dominance can move in this direction. If we do that, we are completing a double bottom on the USD dominance, and that means a little bit of pain for the altcoins. Hopefully, this is just going to be a fake out, maybe a move up and then continuing lower. That can happen as well. I am personally still holding quite a lot of altcoins, but with these things that I read, I just think it's just another wave, up and down, up and down. I'm waiting for slightly better things to exit with my remaining holdings. Remember that I'm no longer holding BTC, Ethereum, Solana. I sold at XRP, and there's maybe 5 more things that I sold at the very highs. They might do another higher high, and that's fine. The thing that ends up putting a smile in my face is going to a bear market, ideally haven't taken profits of everything, because if you have a large bag and you inherit it from another bear market, well, that is pretty annoying. So my focus is not on timing the perfect exit with every single coin, but to try to squeeze a fair amount from each. Now, if I time it perfectly, well, that's something to celebrate, but it's not something to focus on. Focus on not inheriting too many bags. Ideally, if you have 20 altcoins, well, 1 or 2 maximum, but don't end up with 15 red bags because you're gonna feel like crap for 3 years. All right, guys, let's do a little bit of a wrap up. I think we're starting Monday with a little bit of a breakdown in here. This is still sticky and pushing down. There is just about an hour to close the candle. And if it stays like this, the largest chance is that we are going to correct a little bit more to do a retest, maybe into 113, ideally 112.5. If we break that 112.5, it means that there is high likelihood that the bear flag is playing out to the downside to continue to lower prices, right? This bear flag in here. If we hold this pivot, we can go into the green at 119.5. Remember, at that point, we kind of end a lot of liquidity. So the challenge for the price after reaching 120 is, do we find any additional liquidity to make it easier to break the all-time high? Is there something really bullish in the market to do it as an alternative? Or is it really going to follow the bear flag and come back down? We need to be careful. I expect a lot of volatility this week, not just from the FOMC, but also from what Japan has to say on Friday. Thanks so much for watching, and I'll see you in the next one. Bye-bye.